Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Thursday, March the 21st. Well, we did get a little bit of a push-up yesterday for the FOMC statement. Market participants actually felt that the FOMC statement was dovish. I disagree. I think it was a little more hawkish than dovish by his statement. And let me just run through the numbers real quick. Gold down 5, NASDAQ up 23, dollar down 17 cents, S&P up 10, and Dow up 55. We did get one push in the morning, and pretty much the market stayed the same all day. Again, low volatility environment. Market just continues to grind higher here. And I think that Ben Bernanke's statement, and let me just prepare this for you. What he mentioned, adjustments in flow rates of asset purchases should the economic indicators continue to show signs of health. To me, that's the first time Ben Bernanke had made any mention of adjustments in flow rates, and to me, it sends a message that the Fed is fully prepared to start to scale back its asset purchase program should he sees more evidence of a recovery. Now, obviously, that's just me thinking, but I do think that he's probably entertaining some sort of an exit strategy in the coming months. So we're going to really need to see that next couple of FOMC meetings moving along. Now, the Fed, obviously the market, liked that, so we were up 55. Now, I just want to make one thing clear. Just be aware, usually now, when there is an FOMC day, whatever the markets did that day usually reverses the next day. So with the markets up, maybe we get a little bit of a sell-off today. Now, that is obviously nothing actionable, but I just want to let you know, believe it or not, that's what the pattern usually is. So we'll see if that happens or not today. We're down about one and a half handles in the minis while I'm recording this, so not much of anything here. Very, very quiet. Last night, China had their HSBC flash manufacturing PMI, and they had recorded 51.7 versus 50.8. That's their fifth straight month of expansion, which is quite good. And I'm going to show you some of these China stocks, some of the indexes, and to see what's going on with China. Although they are a big manipulator of their numbers and their currency, so you got to take a little bit of grain of salt. But it is what it is. Whatever price. How they react to what their news is how we want to follow it. So China looking a little bit better from the SSEC, and I'll show that to you as well. Cyprus situation is still unsolved, as we all know. They did come out later in the session. A U.S. report said that they're indicating some sort of a plan B that would involve some Russian aid, obviously reducing the levy on bank deposits, which the market popped on that news and then quickly sold off again. So we'll see, guys. The good thing about it is that we are getting a little volatility, and there is a lot more little trades to be had. Now, we have earnings coming out in a couple of weeks in April, the first week of April, which is fantastic. That'll get us some good trade ideas and some trading with volatility with some good earnings. And Oracle reported last night, just like FedEx yesterday, missed top and bottom line really, really bad. So if that's a foreshadowing what is to come, then we could be really looking for some downside movement here. But again, we're not looking here to pick a top. Topping is a process, we all know that, but we are getting some choppy price action, which indicates to me that we might be near some sort of a top. But I wouldn't want anybody to go out there and look to just go short the market, okay? All right, I'm going to get into the charts. Really nothing has changed here. We're going to go real quick on this, but I wanted to show you copper. Copper is a big leading indicator, as you know. We did get a little bit of a bounce. We are oversold here, so this is to be expected. Even if we get up in here, I'd like to see really copper break above the 200-day moving average, get back in a symmetrical triangle, chop around a little bit, and start taking off to the upside. But until then, we have a little bit of a dead cat bounce here. I want to go to show you a couple indicators. I want to just show you the stocks above the 50-day moving average. As you can see, we're moving higher. This is diverging lower from 93 to 85, and we can't break back above this 90 area. So this is a little bit of a divergence of what we're showing here as the S&P continues to grind higher. But we'll see. Stocks are markets. The indexes are moving higher, but stocks are not. Okay, so that's a big negative. So we want to see if they start to move along with the index itself. Take a look at the VIX, and the VIX actually pulled back again. Again, to be expected, and that's why when you're playing volatility, you have a little bit of a profit. You got to take it right now because the trend is higher. The sentiment is higher. So you're just really bucking a trend. And with these derivatives, they could really eat into your profits if you keep holding them. So you don't want to be doing that. Other than an overnight swing trade, really, that's my best advice for you for the VIX. Okay, now let's take a look at the dollar, and I want to show you some China charts. Okay. Now the dollar, we have the dollar holding steady here. No, we're 2 day down, and then now the dollar's starting to move up. That's going to affect our commodities, right? So if we're looking for a GDX trade or a gold trade or an oil trade, you really have to wait until you see this dollar start to really start to sell off here. But if we have volatility and a lot of indecision in the markets and what's going on in Europe, you're going to have safe haven flows going to the dollar and also possibly gold, but we need to see how that works. Right now, it's not working that way. So we really want to pay attention to what the dollar does before you start building any type of position in gold, which I will show you in a moment. As a matter of fact, I will show you gold here. Gold is really sort of trying to break out of this thing. We did have a nice movement here, but then gold pulled back yesterday. And our ratio chart, gold is relative weakness to obviously the S&P. So let's just be a little more patient in this gold trade. I do think that there is a gold trade to be had here, but with GDX not really moving, a lot of these small cap gold stocks, they're not moving at all. I'd like to see them move first before the metal moves, and that's not happening right now. Although I do think in the next couple of weeks we're going to have a nice little gold trade going. Okay, now let's take a look at China. And here's Shanghai, right? If you look here, we have this bullish fallen wedge, or a bull flag, if you will, right? Flagpole. And our ratio chart started breaking above this trend line here versus the S&P. And we are oversold here. So this could be a good start of something to come. Now, if I open this up a little bit, which I don't have, here, up in here, if you take this all the way across, and you look at this area here, this could be an inverted head and shoulders, right? So if you look here, here's the left shoulder, here's the head, here's the right shoulder, and here's your neckline going across. If we see China, Shanghai, starting to really break out here, that's going to be a real good sign for equities. So let's keep an eye. Let's monitor what's happening here. Now, I want to show you the FXI, which is the ETF for the China fund. We did get a big pop up here yesterday. So we had a Doji Star hit on the 200-day moving average, which that held, and we popped right back up here on the opening. So that is a decent sign, but we are clearly in a downtrend. A lot of work to do, but just something to keep an eye on for a barometer for the coming weeks ahead for equities. I do think that we probably get one more pop to the upside. We're close to the 1576 area in the S&P cash. Why not get there? To be quite honest with you, there's no reason why we can't. I mean, we're talking one big day or 1.5 days of movement, and then let's see if the sellers step in here. Take a look at the EEM with the emerging markets. This is another concerning chart here to me. We did have an inside day, but clearly in a downtrend, as you can see. We had this failure of this bull flag. And look at our ratio chart, just really, really weak here. A lot of work to do before that starts to move higher too. But if you look in comparison with the with Shanghai, with the EEM emerging markets and FXI, the China fund, that's what you want to keep an eye on for our emerging markets and our Far East, our Asian counterparts, and see what happens with that. Because if they start to pick up steam, then I think that we're going to have some sort of movement in equities as well, and probably even move higher. Okay, now let's get right into that. Just want to show you quickly the GDX. Inverted head and shoulders here. Looking good, but we still have to break back, really back above 38.20. Now just take this and we can have a little bit of our sideways slanted neckline here. So 38.20, like I mentioned the last couple of weeks, really needs to take this out. 38.20 before we get really excited. If they don't break out 38.20, we could probably fall back down to here, and this would be negated, this inverted head and shoulders bullish pattern. Oil right now sitting here, not doing much of anything. Just the USO sitting in a bear flag formation here. I'd like to see this. If oil breaks higher, breaks above 95, right now trading around 93-ish or so, 95 and then breaks 100, then I think that you might have a little bit, a little problem here. Transportations would sell off, and oil would rally higher, and that would put pressure on equities as well. So that's something that you really want to watch and see what oil does. Right now, it's just chopping around here between 90 and 95. A break above 95 in WTI crude, that would actually give us some momentum to the upside. Now, if you're looking at USO, 33.80, 34, you have that little bit of gap area. That needs to break back above the 50 and then really start to get going and looking at the upper end of this resistance area here. Okay? Spiders, really, again, guys, not much of it at all. It's been a real horrible 3 months of just quiet chopping around, grinding higher, trying to find volatility. But there is opportunity out there. Just really need to really dig deep here. Okay, so as you can see here, really we did get a little bit of movement up above, but very, very tight price movement, and we're in this triangle, we're in this symmetrical sideways consolidation pattern here. So we just really got to really start breaking out or start to break lower. We did catch the 20-day right to the penny, and we moved higher. Now here's the Spider 60-minute. Just looking here, we did break back above it. We got back above R1, which is now really going to acting as support here. That 155.30 and resistance going to be 156.80 if you're looking at the Spiders. As you can see here, we had our momentum indicators drop lower, and now we pop back up above it. So kind of constructive here. I got to tell you, the markets are resilient, and the last thing that I want to be doing is looking to short a market that has strength and that's in an uptrend. As you can see, this is what we're dealing with here. 8-9 days of literally up and down, doing absolutely nothing. A gap up, gap lower, gap down, recovered. Now we're back up again, this area here. So we'll see what happens, guys. We have to be patient. We have to be nimble, and we have to be ready to react to price action here. Here's the S&P daily chart. CCI starting to roll back over again. And again, we're just sitting right in here in its choppiness for the last 2 weeks, 3 weeks, of all of March just about, and we're just sitting around here. So as you can see, we gap up, sideways consolidation, gap up, sideways consolidation, gap up. So we have one big up day, and we consolidate for another 6 or 7 days, and then we gap up again. So really horrible price action if you're looking to trade for income here. Okay, transports. Same thing. We have one larger channel within two small little sideways channels here that you can see. So this test here of 110.30 is valid. As you can see, we tested it 3 times, and we tested it back here as resistance several times. So we're just sitting here, pausing. We are still overbought now, MACD and our stochastic. So we'll see what happens. Just got to wait and be patient until something really starts to break higher. Now, the Cyprus news has been interesting, but really we had one down day, and that really was it. And then all of a sudden, now we're starting to move back up again. And like I said before, I don't think if we were maybe down in this area here, I think the whole picture would have just been avoided, and they would have just shaken it off. But since we're so high at these levels, there's a reason to take profits. Here's the Russell. Again, guys, here, no change. As you can see, pattern recognition, we're doing the same thing on all of the sectors. Same here with the diamonds. Big move up, and now we're just consolidating here sideways. Now, the more we consolidate and the more we just chop around in the sideways channel, what happens is our indicators start to unwind, our overbought reading, and then resets itself for another move higher. Okay? And here's Apple. Apple had another down day yesterday, very small, probably digesting this move higher here, which is fine, long as it holds above 440, and if it could come back down here on low volume, which it's been doing, this is a good sign that Apple could possibly break out. But again, it needs to really prove itself. If Apple does break below the 440, then 420, then you could see a big flush to the 400. But right now, that's not happening. We are getting holding above the 440 area, which is constructive here. Okay, and lastly is the Qs. As you can see here, we're just sitting around this upper end, making another little channel within the large channel here. So I do feel that we're going to get a good trade in technology, but not as yet. I'd like to see technology. I'd like to see the Qs get down probably around the 67-ish area before we look to even get involved. Now remember, Oracle came out down 5% in the after hours, so that's going to be definite market damper. Oracle has actually beat earnings. I don't remember how many times. I don't even remember when Oracle missed. So that's not a good sign, especially Oracle. They're really humming in all cylinders here. Top and bottom line miss, so it's something to think about. Right, guys, have a great day today. Be patient, be nimble. It will come. The volatility will come. I trust you on that. The volatility will come. So just use your stops. Be selective in your trades, and then when this market either breaks down, starts to break lower, there'll be plenty of opportunity, okay? Have a great day, everybody. We'll talk to you tomorrow. Take care.